Hey, this is Doug Tabor, CCIM, and this is your rental market update for Huntsville, Alabama, March 2025. I have to say, when I started out doing the numbers for Huntsville, I was a little bearish. I was a little concerned about what I saw. But then when I started really digging into the numbers, I started to become more interested in this submarket. Also, the fact that I'm going to be visiting it soon helped in that journey. So let's talk about what's going on in Huntsville. The Rocket City is the nickname of Huntsville, primarily because of all of the aerospace industry being there. The MSA population for the Huntsville area is 527,000 people. That's growing. In fact, the overall MSA population has increased in the past 5 years by over 60,000 people. That's a 14% increase. So a lot of folks are moving to Huntsville, Alabama, and I think it's because the cost of living. So let's talk about the jobs. There are a lot of jobs available in Huntsville, Alabama. The unemployment rate is 2.7%. That's right, 2.7%. Now, some folks will say that that's considered a labor shortage. A really healthy market, you want to see an unemployment rate between 3% and 5%. So 2.7% means they're struggling to attract qualified candidates. However, there could be worse things. The bottom line is there's growth, and as I mentioned before, with all the folks moving there, there's opportunities for them to get work. The top employers are the U.S. Army Redstone Arsenal, NASA, Boeing, Hexagon Technology, Dianetics Aerospace, SAIC Aerospace, Northrop Grumman, Toyota Manufacturing, which is a big one, Amazon, Lockheed Martin, and many others. Now, one of the challenges the area is facing right now is that 20% of the workforce is government related. And with DOGE, of course, the Department of Government Efficiency, there are concerns that federal employees might get laid off. Again, 2.7% unemployment rate. What that may mean is that other industries will absorb those folks. The largest economic driver in the metro area is the Toyota Mazda manufacturing facility, which is the company's largest engine producer in North America. It employs over 2,000 workers to help supply engines to 7 Toyota vehicle plants in North America. Earlier this year, Toyota announced a $282 million plant expansion, which is expected to add more than 350 jobs to the area. So that's a big deal. When we do a market analysis, what they want to see is diversity in the industries there. So the fact that you have Toyota being one of the bigger drivers, which is separate from the government industry, is really a powerful thing. Now, that said, for years now, they've been talking about relocating U.S. Space Command from Colorado to the Huntsville area. That hasn't been committed to yet. Apparently, President Trump hasn't committed to that. However, it is in the works. Also, they're talking about bringing in an additional 500 FBI employees into the area. So certainly, there is a lot of work available in Huntsville, a lot of government work, which could be a good thing, could be a bad thing. In the past, we would look at those government employees as being good, basic jobs in a marketplace. Hey, it's Doug Tabor. Since 2012, I've been selling apartment buildings and rental properties. And the number one reason landlords tell me they want to sell is? It's because they're tired. They're tired of the telephone calls. They're tired of the turnover. They're tired of the trash. Let's face it, they're tired of the tenants. And many of them have a ton of equity, but they want to reinvest into something more passive with less headaches and aren't sure what their options are. That's why we created the 1-hour webinar for exit strategies of appreciated rental real estate. In it, we present the top options for rental property owners, such as keeping the property, selling the property and paying the tax, the 1031 exchange process, charitable remainder trusts, passive investments such as triple net leases and DSTs. It's very easy to watch our pre-recorded webinar. Simply register, it's free, at rentalownerworkshop.com. Again, rentalownerworkshop.com. You know, over the last 5 years, we've had positive reviews from hundreds of people who have watched the webinar, many who have become clients. Again, free to register. Just go to rentalownerworkshop.com. Hope to see you there. Let me remind you what a basic job is. A basic job essentially means that it's a job that brings income into the community from outside of the community. And for every basic job you usually have 3 or 4 local jobs that support that basic job. So again, when you hear someone talk about a basic job, an economist, what that means is it's a job that brings income into the community from outside of the community. It's not a support job. So I went on to Indeed, which is a job posting website, just to get a sense of how many jobs were posted. Again, we're in March 2025. And on Indeed, there were over 13,000 plus jobs that were available. So I decided to dig a little deeper and find out how many jobs were available that were paying above the median income. Because, 13,000 jobs, that could be everything from a service worker, a barista at Starbucks, all the way up to an aerospace engineer. So I wanted to dig a little bit deeper and find out how many jobs were available for those folks that make a higher wage than the median income, which, by the way, is $64,000 a year. And I was able to find 4,000 high-paying jobs, many in the hundreds of thousands of dollars a year, that were currently active looking for those roles to be filled. That's very, very positive. The fact that you have a smaller population, 527,000, with that many jobs available, also high-paying jobs, I really look at that as a positive in that economy. So as far as the jobs, it looks like Huntsville has very strong employment growth potential. So let's talk about the housing market. The one thing that concerned me about this market is that it has an extremely high vacancy rate. Currently, the vacancy rate in this market is 18.5%. That's pretty high. Now, I think the reason for that is that they've had so many multifamily properties come online in the recent 12 months. And somebody did what's called a stabilized vacancy. And basically what that is if you take out all of the multifamily that was delivered, which we're going to talk about here in a moment, what those numbers look like, the stabilized vacancy, which is removing all of that new inventory, would be 9.5%. 9.5%. This is the first time I've heard about stabilized vacancy. It certainly can make sense. In my home market of San Diego, we would see the downtown market fluctuate quite a bit every time a new high-rise apartment was put into the market. It would go from a 8 or 9% vacancy rate to like a 13 or 14% vacancy rate. So stabilized vacancy certainly makes sense to me, and that would really help this market going from a 18.5% vacancy rate to a 9.5% vacancy rate. Another challenge I see with this market is the annual rent growth. It's actually negative 2.8% per CoStar. So a negative annual rent growth, in other words, rent growth over the last 12 months of 2.85% is not a good sign for the market. It means that rents are declining. That said, pretty much every market across the country at this time, rents have been declining over the last 12 months. And that's primarily because we're in that market cycle where you're starting to see oversupply of these markets, especially in multifamily and many of the markets across the country, where you're now seeing reduced or negative rent growth. In fact, in our market in San Diego, which has always been a 4 to 8% rent growth market, we're actually hovering right around zero for the last almost 18 months. So to see a negative annual rent growth certainly doesn't seem alarming considering what's going on in the country and the fact that you have an oversupplied market with new housing. The market asking rent for a single family residence, $1,595. Per Zillow, that's 31.8% lower than the national average of $2,073. So that could be one of the reasons why so many people are flocking there. You get reduced housing rent by up to 30% lower than the national average. Market asking rent for apartments is $1,260. Those are low rents, below the national average of $1,750. So that's the difference. National average, $1,750. Huntsville, Alabama, for an apartment is $1,060, almost $500 lower. That said, because of all the supply, we're rating the demand from tenants as cool. It's not a hot market right now. You've got a lot of supply coming onto the market. You have reduced rents. All of that are symbols, and a high vacancy rate. All of that are symbols of a cooling market for tenants. Rent, again, compared to the national average, is 30% lower. So let's talk about some of the benefits of the state. If you're investing in that state, one of the big positives of Alabama is there is no state property tax. So you buy a property in Alabama, you do not have any state property taxes. That is a big deal. Right now, we're looking at properties where your property tax can be anywhere from 0.5% to 1.5%. To have that reduced expense of a property tax is really a positive deal. The state income tax rate in Alabama is 5%. Insurance cost ranking in Alabama is actually $768 higher than what your average insurance rate is. That doesn't mean that it's $768 a year. It means you take your average $300,000 home, whatever that insurance rate is for the market, Alabama's going to be a bit higher by $768. And that's probably because it's Tornado Alley, or what they call Dixie Alley, which is a high tornado zone. The utility cost ranking for this state are the third highest in the nation. And that was surprising for me. Now, I want to make a note. We don't report on crime, so I did not do a search on crime. Crime rates are very subjective. They're always market by market, actually submarket by submarket. And so we encourage you, if you're looking to invest into a state like Alabama, to look at the crime rates before you invest. Okay, so now the big question. Is Huntsville, Alabama a landlord-friendly or a landlord-unfriendly market? Well, let's talk about rent control. Is there rent control? No, there is no rent control in Huntsville, Alabama. What is the eviction process like? Fast. A 7-day notice for non-payment. Court hearings are quick, typically within 2 to 3 weeks. So the eviction process is fast in Alabama. And that's a good thing because, like you've heard me say before, bad tenants got to go. Get lost. Security deposits. There is no state cap to security deposits in Alabama. And finally, tenant boards. There are no official tenant boards in Alabama. So, is Alabama landlord friendly or an unfriendly state? We're calling it landlord friendly. Outstanding. All right, let's talk about the markets in general. For the single family market, you have approximately 1,144 units delivered, single family homes delivered in the last 12 months. Current active listings are 5,089. So there's quite a few listings for the single family market in Huntsville. Number of new listings, 228. That's a 15.6% month over month decrease. So fewer properties are coming out onto the market in March in Huntsville. So what's the trailing sales data look like? The number of sales in the last 30 days is 963. That's a 27.5% month over month decrease interesting. So you're having a 30% drop in the number of sales in this marketplace. Now, I've watched a number of other experts in this market, people that are on the ground in the market, and they said that January, February were actually higher months. So, when we try to get this data, it's coming from all over the place. Who knows what to believe? And that's why we're going to try to connect you with an expert here if you want to look further into the details of the Huntsville market. Hey, it's Doug Tabor, CCIM, host of the Rental Market Updates. When I do these high-level updates with a focus on the numbers, it's not lost on me that real estate is still a local market business, even down to the block. That's why I've partnered with trusted agents across the country who know how to serve investors like you and rental property owners who want to invest in their markets. If you're looking for an agent in a specific market, contact me. We'll connect you with a pre-screened market expert who you can trust. Contact me by going to my website. The link is in the description below, where you'll find my phone number, email, or a contact form. Let us find you an agent you can trust. But my research shows that there's actually been a decrease in the number of sales. The median sales price is $296,000, and that's a 5.3% year-over-year decrease since 2024. So home prices are dropping a bit in Huntsville, Alabama. And that's interesting because if you're looking to invest there, you might want to skate to where the puck's going to be and get an opportunity to invest in something that is going to be going down in the future, especially in a strong market where the job growth is imminent. The median GRM for this market, that's where I take the sales price divided by the median rent, is 16.14. So that's not that great for a market where you're investing. You might want to get that a little bit closer to a 10 times gross or GRM. But again, when you're thinking about skating to where the puck's going to be, you start seeing prices going down. You start seeing an oversupplied market. And you look at all this information and think, okay, is this going to be a market to invest in the near future? And the current median days on market for single family is 71 days on market. That also tells me that it's a buyer's market. So again, you take the amount of supply that's coming on the market, the number of listings, the fact that you're seeing a decrease in the number of sales, you're seeing a decrease in the price, the median price. What that tells me is that you see a market that's looking to become a better buying opportunity in the next 6 to 12 months. So that's single family. Let's talk a little bit about multifamily. Currently, there are 48,000 multifamily units in the market. In the last 12 months, there have been 5,300 units delivered. In the last 5 years, a big chunk of that 48,000 units have been delivered to the market. So you've seen a lot of building, a lot of multifamily in this market. The good news, however, is in the last 12 months, 4,600 of those 5,300 have been absorbed. So you are getting people moving into those units. However, I would say the sentiment for this market on the multifamily side is oversupplied. So let's look at the trailing 12-month data. This surprised me. In the last 90 days, there have only been 12 multifamily sales in this market. That's 12 total sales. That's all I could find. Of those 12 sales, the median price per unit was $84,375. So very low median price per unit. The median cap rate for the last 90 days, 7.3% capitalization rate. Currently, there are only 12 listings for sale on the market. So you've only had like 12 sell over the last 90 days, and you currently only have 12 listings. The median days on market are 96 days. So it's a buyer's market. The challenge is there's not a lot to buy, which really surprised me. So my sense is when you go into this market, all this multifamily that's being built is going to be bigger properties, larger Class A, Class B, luxury style properties. They've been coming online recently, and they just haven't hit the market. They haven't been sold. The average building size of the properties of those 12 that are on the market is 14 units. So there are smaller properties that are sold. In fact, I saw a couple of fourplexes that were on the market that look like a good opportunity. Now, of course, you got to get on the ground because, again, it's a local market. Got to sit down with a local agent and find out what that street is like or what that block is like as far as an investment opportunity. But there are some properties available, but I would say that you have more opportunity today in the single family side of the house than the multifamily side. So what do we think about the Huntsville, Alabama market? Well, again, when I went into this research, this rental market update, I was thinking, this sounds a little bit bearish. You've got high vacancy rates. You've got oversupply coming on. You have negative rent growth. Those don't seem to be good characteristics for a market you really want to consider. However, going back into the data and really digging into that job growth, that low unemployment rate, and the fact that there are a lot of jobs that are out there that are higher paying jobs even than the median income, it's really going to depend on what happens with a couple of things. The government. Are they going to be moving more jobs to this market? Or on the flip side of that, what could really torpedo this market is if DOGE comes and cuts a lot of those jobs. That could really have a hindrance on the market. So it really is going to depend on what happens with a lot of these government jobs. However, there is still Toyota and some other companies that are bringing jobs into the market, which diversify the economy. So I would say that Huntsville is certainly a market you want to look at and keep an eye on, because if you're looking for a market to invest in where you're going to have strong job growth, and we know we always focus on job growth in these updates because that's really how the bills get paid, especially if you're a landlord, as well as a market being very landlord friendly, and the fact that more inventory is going to be coming online. They're overbuilding. At some point, things are going to break where the prices are going to go down, properties are going to come on the market, and if the momentum is going towards the economy expanding because of the job growth, you might have a really strong rental market to invest into that gives you some decent returns. So all in all, I really enjoyed looking into the Huntsville, Alabama market. I'm definitely excited to visit there, and I'll keep you posted on what that looks like when we get on the ground. I'm Doug Tabor. That's your rental market update for Huntsville, Alabama, March 2025. Remember, like and subscribe, and let us know in the comments what market you want us to do our next deep dive into on the rental market update. Thanks a lot. I look forward to speaking to you real soon. Take care.